Now I'm going to answer one of the number one questions that seems to be getting people the most upset. A lot of people are sitting down with me and redesigning their whole plan to get debt free. I mean, let's face it, this till debt do its thing part is getting to be a pretty big deal. So I do sit down with everyone and do a budget. And then one of the first things that I like to call a deal breaker, or something that down the road that's going to explode and not let this happen, is your current penalty. I just discussed on one of my other blogs, please look it up, How Do I Get My Penalty? But now I want to go a little bit deeper on why people are so upset, because they're getting given this massive penalty figure. I just had one the other day. It was a $170,000 mortgage, and their penalty was about $15,000. So the funny thing was, on that specific deal, it was still worth them to do the refinance, pay the penalty, because they were going to save up to $26,000 over the next 2.5 years, which was the remainder of the mortgage. But let's get to the penalty anyway, because everybody's case is different. Sometimes it's worth it, sometimes it's not. But let's discuss where this penalty is coming from. There's two key components, like I've discussed before. 3 months interest penalty, which is the calculation of added up of 3 months, quite simple, of interest. The next one is called IRD. We call that interest rate differential. And what this is, let's say, for example, 2 or 3 years ago, a lot of people locked in for a rate, maybe even 5.6% on a 5-year fixed. Well, then the bond market came down, that's what we call a stock market crash, and the 5-year bond, so the 5-year fixed, then became as low as 3.79%, some places even lower. So with that big spread, a lot of people would be calling in to say, you know, bank, I want to break my mortgage and take advantage of these lower rates. The problem with that is now we have a differential. So what the bank's calculation is your rate, say 5.6, subtract the going rate of 3.99%, for example. Once you have the differential, it's times multiplied by your mortgage amount, then multiplied by how many months you have left. And this is why when you're so early in your 5-year, it can be such a big penalty. Okay? So is there any ways around this penalty? Well, for one, you do have your lump sum options. So if you can pay down 20%, if you have the funds, well, you can obviously decrease your penalty by 20%. The only other option is, as rates are increasing nowadays, as we're hearing on the news, that's going to help shorten your penalty. So it might be worth it to keep calling in and not give up. If you were given a penalty a couple of weeks ago at a certain amount, well, perhaps it could be a lot lower now because the spread is shortening up. Not only that, what I want people to ask, and start asking the banks, and you totally have the right to know, is how are you calculating this penalty, bank? I want to know, I want you to ask, what rates are you using? Are you using my old 5-year posted or my 5-year discounted? Because if you got a mortgage through us, you probably got a discounted rate. On top of that, what are they calculating it against? For example, if you have 2.5 years left, are they using the 2-year rate? Or are they rounding up and using the 3-year rate? Because as we know, the 2-year would be a lower rate, which would cause a bigger differential. So whenever you're calling a bank and they're saying that your penalty is interest rate differential, please finish with, can you explain what 2 rates you're using to get the differential, and then what are you multiplying it to get the penalty? It doesn't hurt to ask questions. I mean, it's your number one investment. It's great to ask questions, actually, and that's what the mortgage teacher is here to do. If you have any other questions, please look me up on themortgageteacher.ca, and please do look at The Mortgage Teacher on Facebook, Twitter, and even this YouTube channel. Take care, and I hope this helps.